So we are at an epic level on Bitcoin, all right? And what I mean by that is that in terms of psychology of the market, this level is the top level to watch, meaning that if we can break it, that's very bullish that the lows are officially in on Bitcoin at 15,700. If we can't, then to me, there's still an opening for Bitcoin to go down to 12 to 13,000 level and maybe even below that.
The prices of cryptocurrencies continued to decline on Thursday, as the recent rallies of Bitcoin and Ethereum stalled. Bitcoin was trading around $28,600, reaching as low as $28,289 in the morning, and has fallen for 5 of the past 6 days. Last Tuesday, Bitcoin surged above $30,000 for the first time in 10 months and reached $31,019 late last Thursday, marking its highest level since June 7th. In March, Bitcoin spiked 20%, recording its best month since January when it gained 38.7%. The world's largest cryptocurrency has rallied roughly 73% so far this year. Meanwhile, Ethereum fell to $1,950 on Thursday and dropped to as low as $1,919 in early trading after reaching its highest level since May 15th at $2,139 last Sunday. Ethereum has hovered around $2,000 this week. The number 2 crypto rose 10.6% in March and has surged nearly 63% year-to-date following its Shanghai upgrade to a proof-of-stake network, which helped it surpass $2,000 for the first time in nearly a year last Thursday. While Bitcoin's volatility can be concerning for some investors, others see it as an opportunity. The price fluctuations allow traders to make profits by buying low and selling high, and for long-term investors, it can be an opportunity to buy Bitcoin at a discounted price and hold on to it for the long term. Furthermore, the technology behind Bitcoin, known as the blockchain, has potential uses beyond just the cryptocurrency. The blockchain is a decentralized ledger system that can be used for a variety of applications, from secure data storage to digital voting systems. This potential for wider adoption and use of the technology could further increase the value of Bitcoin as an investment. In a new interview on the Investing News YouTube channel, here is Soloway from MoneyTalks.com and VerifiedInvesting.com shared 2023 price targets for Bitcoin based on the Bitcoin charts.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
The reason I bring up this level at 30,500 specifically is if we take a trend line and we go back to the lows starting in 2021 before the big pop, then the retrace came right back in there where we hammered on it for a long period of time. We then had the run to 69,000 and we came back in and consolidated right along that line. So psychologically, when we broke this, that was very bearish for crypto. If we could get above it and stay above it, then that's very bullish for crypto. So again, right now we have made a full round trip from this breakdown here all the way back to that level, but we're still hammering on that level. And again, the level's approximately 30,500. So for me, this is an epic level to watch. I want to see, can it get above? Can it stay above if it gets above? If it does, I think that bodes very well that the crypto markets have bottomed out for this bear market cycle. Yeah, so it's so interesting on the Bitcoin price because number one, when it was at 15,700, 20,000 even, we were oversold. There's no doubt about it. We were just coming off of FTX's collapse, lots of fear, all of that stuff. Anytime you get a maximum fear, you're going to get a reflex buy and kind of pop. It's just the nature of the cycle of markets. What ended up happening is after we were up here, we started to fall back down, and then the banking crisis happened, and I think there was a lot of money that went right in from the regionals into Bitcoin, right? I mean, and again, I've said this before, but if there's one reason for Bitcoin to be Bitcoin and be what it is, that crisis in the banking markets showed it, right? I mean, that's exactly what Bitcoin is supposed to be. It's supposed to be an alternative to the fiat currency system and the banks and all that stuff. So that really propelled new money in. And then as of now, we've seen generally a risk-on environment in stocks, in cryptocurrencies, which has kept it kind of grinding higher. So I think that was kind of a little bit of a situation where it was very, very good for the crypto markets in Bitcoin. Now, again, the big question is, can it get through here? If the stock market starts to decline precipitously, does that pull it back down? I do think it's still a risk asset, even though it's still showing signs every once in a while of being a store of safety. So as of now, as long as we stay below this 30,500 level, I'm going to remain slightly bearish, thinking we still are not through the bear market. But again, if we get above there, then it could be a game changer. Again, the bigger question is on the levels. When do we break, right? So the way as a trader I work is that each level is a level until it's broken. So let's just say we pull back here. We could very clearly see that there was a lot of support here where it kind of consolidated, and that level's around 26,700. We then have a level at 25, and then this beautiful upsloping trend line around 22. As we break those levels, like if we break 22 here, you then have this pivot low at around 19 and change, essentially 20, and then the double bottom at 15.7. So for me, it's going to be a more of a stage. I still think that's possible. I find it very hard to believe that somehow the crypto market has bottomed with so much bullishness in it. You never really got the panic and fear. Even with FTX, you didn't get people saying, I'm throwing out crypto, it's done. For the most part, it was buy the dip. And that's a very concerning mentality. If you look at all the bottoms in markets in history, that doesn't happen. Also, you have so many cryptos that are still out there that have very minimal use case, if any, and they're still alive and well, versus in the dot-com era, you basically saw a washout of those dot-coms that had no use case. So there's a lot of signals to me that are very concerning. And so I want to be very careful about, whether or not we can get down to 12 or 13. I think we still can. 9, if we break 12 to 13, then we're headed right for 9.
What if you could use retirement accounts to invest in crypto? With iTrust Capital, you can. iTrust Capital allows you to invest in your favorite crypto assets 24/7 with the tax benefits of an IRA. So instead of paying taxes on your crypto gains every year, you can defer taxes till you retire using an iTrust IRA. Or with an iTrust Roth IRA, you can withdraw tax-free at retirement because you're in this for the long haul. Start investing today.
Yeah, so for me, the most success has come from short-term trading, right? Where when we get this volatility in the markets, I'm jumping in and then I'm jumping out, and then I'm usually getting back in at around the same level. So it's been a trader's market. I think that when you had the Fed intervention with all the money printing, it basically made the markets just go sideways to up for long periods of time. I remember the VIX getting down sub 10 over the last 5 or so years when the printing was going on, when quantitative easing was going on. And that was very detrimental to people like me who are swing traders, who like the quick moves, the volatility. Now we're back in a volatile market, and that is just gravy for us that want to get in and want to get out. And I can make so much more money than a long-term investor by trading the levels back and forth. And just like you said, it's a matter of I'm a trader that's always reanalyzing, right? Every day I'm doing a risk-reward assessment. I'm doing a probability assessment. Are we going to bounce here? Are we going to break here? How's that going to play? And then that dictates my daily trades on a consistent basis. I think that the market was kept neutralized, almost like being a drugged patient, where the Fed was injecting this money and it was just keeping the markets kind of in zombie mode, grinding higher. You now have a patient that's getting off the drugs, right? The Fed stopped printing the money, and now it becomes a much more real-life situation where there's volatility, there's craziness. And as long as the Fed isn't coming back and printing money, you're going to get this more volatile market, which means traders and investors need to be more nimble. You can't just be an investor that, to me, goes to sleep and says, hey, I'll check back in 3 years, and I hope I did well. That was the old way. The new way is to be more of an active trader.
What do you think of Gareth Soloway's interview? Do you believe that Bitcoin has not reached its lowest point and could potentially drop as low as $9,000? Share your thoughts in the comments section. In other news, House Republicans expressed their concerns regarding the U.S. Securities and Exchange Commission's oversight of the cryptocurrency industry. They argue that the agency's chairman, Gary Gensler, has been too aggressive in bringing enforcement actions against the industry while also failing to provide clear guidance on which tokens fall under its jurisdiction. During an oversight hearing, the Republican chairman of the House Financial Services Committee, Patrick McHenry of North Carolina, criticized Gensler for refusing to clarify whether digital assets are subject to securities laws and how firms should comply with these laws. McHenry specifically asked Gensler to state whether Ether, the second largest cryptocurrency by market capitalization, is considered a security. However, Gensler declined to provide a clear answer on any particular digital token. Gensler has previously stated that most cryptocurrencies are securities and therefore fall under the SEC's purview. However, he has also acknowledged the need for clear regulatory frameworks to address the unique characteristics of the crypto industry. The SEC has been ramping up its enforcement efforts in the crypto space, targeting companies and individuals for alleged violations of securities laws. This increased scrutiny has caused some concern among industry players who fear overly aggressive regulation could stifle innovation and hinder growth. At the same time, There is a growing recognition among regulators that the crypto industry needs to be held to the same standards as traditional financial markets. This includes measures to protect consumers, prevent fraud, and ensure market stability. The debate over how to regulate cryptocurrencies is likely to continue as the industry continues to grow and evolve. It remains to be seen how regulators will balance the need for innovation and growth with the need for consumer protection and market stability. For more daily dose crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.